Thank you, sir. Good evening, students. So today we will be having a discussion on the kind of a procedural topic. Okay. But I can see that this being a procedural topic, the interest of students will be less, but doesn't matter because this is still a very important topic because we are clubbing three topics. Okay, we are clubbing the topic of payment of taxes. After payment, we will also discuss on TDS and TCS and then also discuss on the return. Yes, good evening, Mr. Lokesh. I hope you're doing good and the discussion today will be very fruitful to you all. We will see that whatever discussions we have done in the previous chapters, which was very much important to come to this chapter because this chapter we will not understand unless we have a discussion on the previous chapters and we've had clear understanding, proper understanding on the important aspects, on the aspects of supply. We have had discussion on input tax credit. We have had discussion on time of supply and place of supply, right? So those topics were kind of building blocks to come to this topic because unless we understand those topics, we will not understand this important topic. So we are now discussing on this topic, which is after you have assessed your tax, after you have determined your liability, how do you pay it, right? So that's why once everything is done, we have to pay the taxes. So how will we pay? We will come to know in this chapter, how do we pay the taxes? And government wants the revenue in advance and also wants to track whether everybody who is supplying, whether he's paying the taxes correctly or no. Now, such a huge population, so many people registered under GST, but whether their supplies, whatever they're doing, whether they're disclosing correctly like everyone. So they have to come up with creative ways to identify through other channels. That is, that if somebody else is involved in the transaction, like if there is an e-commerce transaction, I am supplying some goods through e-commerce. Now my filing with the GST authorities may be correct or wrong. I may tell them I'm supplying 1 lakh worth of goods, but through e-commerce I may be supplying 5 lakh worth of goods. So government knows that yes, in this supply chain, there is an e-commerce entity and all transactions will be routed through this e-commerce entity. Now this e-commerce entity will give me correct data because their data has to be correct and their data has to be more accurate. So they will take data from e-commerce operators directly or indirectly through setting a mechanism. So they will set a mechanism saying that any transaction which is routed through this e-commerce has to collect some taxes called as TCS. So that is when the TCS collection happens for the main objective that the government will get the data saying that who is supplied through an e-commerce operator. So they will get to know that data. Now from that e-commerce operator, they will know that yes, they have cast an additional liability on these e-commerce people saying that you have to now give me the data of who are all the suppliers who have supplied goods through your portal. What will happen? They will give the data and they will say that whatever data is there, now we will not go and check that. What we will do is we will put additional liability on you that any transactions which is happening through your portal, you have to collect additional taxes from the supplier and remit it. So that if he wants to claim that credit, then he will file the return. So how cleverly the government is coming up with systems so that anybody who wants to claim that benefit of taxes which is deducted or collected by these organized players, they will have to file the returns, and then if they do not file the returns, then they cannot claim the credit. So it's a loss to them. So they will be motivated now that yes, I want to claim that credit, so I will file my returns. So they will go and file the returns. Okay, that is when the picture of TCS comes in, and TDS comes in when I supply something to the government and government says that yes, I have bought goods from you. While I make payment to you for whatever you have supplied to me as a government, I will deduct some portion. That is called as tax deducted at source. Okay. So that is called as tax deducted at source when I am deducting some taxes and paying to you. Now you want to claim the benefit of the TDS, then you file your returns. So the TDS and TCS, the percentage also are very minimal so that it will not burden the taxpayer, because it should not be that most of his sales goes to the government. That should not happen. The portion of the sales, what he's doing, right? It should get routed through a proper channel so that the government gets to know the supply chain transaction, but he will claim the benefit also, and he will not get burden also. That's why TDS and TCS are not at a high value, it is at a very low value. Once we discuss the TDS and TCS provisions, we will then move to the discussion on returns. Ultimately, GST, whatever happens, is all reported in the returns itself. So you're making supply, you're buying input tax credit, you're making some purchases. All of that gets captured in one document. That document is a return document. So all of that data has to go into the returns, and returns will give the final picture. Okay, so you're geared up for this chapter. Are we ready? Okay. So as soon as you file your application for GST registration, what will happen is you will get a registration number. And once you log into the GST portal, you will see that these ledgers are getting populated. Or there will be three kind of ledgers will be opened along with your GSTIN number. Like how you have softwares, you have simple tally software. Once you create a new company in the tally, your default ledgers comes in, like your cash, your bank, your capital account, right? These things will by default be there. Similarly, once you register under the GST, you will see that three ledgers are opened up. What are these three ledgers? They are called as electronic cash ledger, electronic credit ledger, and electronic liability register. So these three ledgers will be opened up once you get your registration number. Now, electronic cash ledger and credit ledger are prepared and updated by the taxpayer. How? Through filing your monthly returns. You are adding up the balances to this. That is, once you file your GST-3B, your electronic credit ledger pops up and the balance increases. Once you make payment to the government through electronic cash ledger, the balance in electronic cash ledger will increase. Now you have two accounts with the government. One is electronic cash ledger and one is electronic credit ledger, which is a benefit to you because once you purchase, the supplier will charge GST. The supplier has charged GST. You will claim that as a credit. Now that credit is a benefit to you. Why? It's like an asset for you. You can utilize it, right? Like in your bank account, you have some balance. You can use it for anything. You can withdraw it through a debit card, or you can withdraw it through a check, or you can use a UPI and make payment to anybody. Similarly, electronic credit ledger is a credit balance. You can utilize it for payment of taxes. That is a very biggest advantage we get from the electronic credit ledger. But electronic cash ledger is more powerful than your credit ledger. The reason is credit you can utilize for payment of only taxes. But electronic cash ledger, you can utilize it for payment of taxes, payment of interest, payment of penalty, payment of late filing fees, any offense you have done, everything can be paid from the electronic cash ledger. But you have to make the payment in cash for the electronic cash ledger. But credit ledger, you don't have to make payment in cash. The credit gets accumulated through the purchases what you make. And we have seen in the input tax credit chapter, The input tax credit chapter itself, we have understood what all things, how can the credit get added in our electronic credit ledger, right? 16 says there are 6 conditions. Once you satisfy all the 6 conditions, you can claim the credit. That is the electronic credit ledger. Then after this is the additional balance, which is a asset for you. Now you're coming to liability. Liability is you have filed your returns saying that this is my sales. Once you disclose your sales, right? Once you disclose your sales, you will also disclose that on that sales, how much is your tax liability. So once you disclose that this is your tax liability, that will come in your electronic liability register because you are making sales, you are collecting the amount from your customers, right? You are a supplier and the recipient pays the taxes to you. Once you raise the invoice, right? You may raise the invoice or you may not raise the invoice, but when the liability, when the time of supply has triggered, the liability has arisen, that you will disclose in your return saying that this is the value of supply which I have made. And on that value of supply, a percentage could be 5%, could be 18%, could be 28% is the liability which I have to pay, which you will disclose in your returns. That will get captured here. Once you disclosed in your returns, based on the returns, the electronic liability register gets increased. Okay. This we know the basic, but just to brush up, I have just discussed this that 3 ledgers comes in. Liability register. Liability register gets reduced once we make utilization from the electronic credit ledger and the electronic cash ledger. Those are the only ways, 2 ways how your liability can come down. Now, what is the basis of these? The liability on supply is determined in the monthly return. Yes. And presently that monthly return is GSTR 3B, but payment is made through different sections. And liability is not always completely paid in cash. Can be paid partly in cash and partly from the credit, what you are accumulated from the electronic credit ledger. Okay. And you do not have to file separate returns for CGST Act, SGST Act, and IGST Act. CGST Act and SGST Act go hands in hand like a railway track, right? Both go in parallel always. If they are not in parallel, then there'll be an accident, correct? So how a railway track, you have parallel train tracks that both go in the same direction with each other. Similarly, CGST and SGST go in parallel. But IGST Act is not in parallel because CGST, what percentage you have, same percentage will be SGST, but IGST is double of this. C plus S is your IGST. So you do not have to file a separate return for C and S is clearly understood because both are in parallel. But the provisions of payment, returns, filing, all of these provisions of CGST is applicable to the IGST Act also. So whatever returns you file for CGST, you have to add a column for IGST and you have to file one single return. So you do not have to file multiple returns. One return containing all the details of the taxes payable under CGST Act, taxes payable under SGST Act, and taxes payable under IGST Act has to be disclosed in one return itself. Okay, so one return for all the 3 to 4 acts. CGST, SGST, IGST, UTGST if you are in a union territory, and if there is any cess applicable, then the cess also is filed in one return itself. Okay, so what are the 3 ledgers we spoke? We spoke on electronic liability register, which is coming from Rule 85. Rule 85 says that you have to maintain the electronic liability register. Rule 86 says that how you should maintain your electronic credit ledger. And Rule 87 says how you should maintain the electronic cash ledger. So these are the 3 ledgers which are to be maintained. And this is maintained in your electronic ledgers in the portal itself. Tax liability register will record all the taxes. That is, all the liabilities in terms of tax, in terms of interest, any fees, any penalties, all of this will get tracked in the tax liability register. Tax liability register will reflect the total tax liability for a particular month. monthly, how much is your liability will get tracked in your tax liability register. Then you have your ITC ledger, which is your input tax credit, which is a self-assessed credit as on today. You will, of course, see the balance in your GST 2B and claim it. But of course, it is you will yourself determine and say that this is my input tax credit. Now, ITC ledger, the importance is from the ITC ledger. Again, I'm repeating this because you have to make a difference between the balance in the input tax credit register ledger and your ITC register and electronic cash ledger. ITC, electronic credit ledger and electronic cash ledger, you have to have a distinction. In your electronic credit ledger, what you will have, whatever credits you are got on your purchases and on your expenses. Now, this balance in your electronic credit ledger, you can utilize for making payment of tax only. You cannot utilize for making payment of any amount other than tax. Suppose there's a liability. There's a liability for a penalty amount. And you have in your electronic credit ledger balance of 5 lakh rupees. And the liability for the penalty is just 10,000 rupees. So tell me, can you utilize the balance in your electronic credit ledger for making payment of this penalty amount? Right. You cannot. Very nice. Correct answer, Miss Kushi, Miss Nagaraj, Mr. Parthasarthi, and Mr. Lokesh. You cannot utilize whatever balance is there. You have 5 lakh, 5 crore balance in your electronic credit ledger. Still, you cannot utilize it for making payment of any penalty. You can utilize for making only payment of tax only. But if you have balance in your cash ledger, you can utilize for anything and everything. And you can also utilize for making penalty, interest, late filing fees, anything. Now, how does the balance in the electronic cash ledger comes in? Once you make the deposit and the TDS, TCS, whatever is deducted by the e-commerce operator or government, that also gets added in your cash ledger. Okay. This is nothing. Now, how do we make payments of taxes? Credits in your electronic cash ledger will be once you make payment through various modes plus TDS and TCS will be a credit in your electronic cash ledger, and input tax credit once you claim it on a self-assessment basis in your return, that gets added in your electronic credit ledger. That is the credit part. The debit part will be from this credits payments of any taxes, interest, penalty. That is the cash ledger. We know, we spoke just now that payment of tax, interest, penalty, fees, or any other amount can be made from the electronic cash ledger. But from the electronic credit ledger, you can utilize only for payment of output tax, either under this law or under the IGST law. Okay. Now, electronic cash ledger, it's a summary, date of credit, when you will make the payment, that will be the payment. What is the date of credit is the receipt of CIN from the collecting banker once the CIN is generated. Suppose there's a delay in the CIN. Today, 20th, say today is the 20th and today is the due date of making payment. You have made the payment. You have made the payment, but just one moment. You have made the okay. You have made the payment on 20th, but the government has got it on the 21st. How do you know that when they've got it on 21st? By seeing the CIN, that is a Challan identification number. That Challan identification number is generated next day. Why? Because you made the payment and it got stuck. The internet went off and it is not credited to the government account. So then the date of credit will be the 21st, not the 20th. So date of credit is on the receipt of CIN from the collecting banker once the banker processes it. Generally, it is seamless, but in some instances, due to some problem, if it is got stuck, then the date of CIN will be the relevant date. Legal provision says that payments, what is to be made, we know this. We don't have to touch this. For any intrastate, we pay CGST and SGST. For interstate, we pay IGST. And in addition to the taxes, what we pay, there is a revenue to the government in terms of TDS and TCS, and they do assessment, right? They do audits. At that point of time, if there is any kind of payment that is happening, that is also a revenue to the government. Liability to pay GST is on supplier, and in case of reverse charge and in case of imports, it is on the recipient. But generally, taxes will be on the supplier. In special cases where RCM notification is triggered, then it will be on the recipient. And in case of notified case of intrastate supply of services, the liability will be cast on the e-commerce. So either the supplier will pay in normal cases, in special cases, the recipient will pay. And when the transaction is happening through an e-commerce operator, which is notified, and that e-commerce operator is notified that he has to pay taxes, then he will pay the taxes. So there could be three people who can pay. One is a supplier can pay. In case of reverse charge mechanism, recipient can pay. And in case of notified e-commerce transactions, the e-commerce will pay it. Okay. How do you make payment of taxes? You can make payment. Yes, Nagaraja.
Sir,
Yes.
payment mode, sir, in payment mode time, registered person deducted, collected ST, CGST at a time. Registered person TDS also collected, sir. Same
No, I
time,
didn't.
registered person payment time collected. That means purchaser,
Hmm.
even a purchaser, purchase from registered person at a time SGST, CGST, and also TDS also paid, or even what mean at a time same time as those tax also paid, sir.
See, I will tell you an example. It is not like duplication of taxes or something like that. What happens is, say you have made a supply for 1 lakh rupees.
Yes.
Okay. And on that taxes, say for simplicity, we'll consider IGST at 5%. So 5,000 rupees. So you're raising an invoice for 1 lakh plus IGST. So what will the purchaser do? Purchaser is supposed to pay, say, this is a government TDS purchaser, government purchaser. And on the government purchaser, they've said that if you're buying something, you have to deduct TDS. Okay. So when the government purchaser is buying this, he will pay how much ideally? 1 lakh rupees plus 5,000. So it will be 1 lakh 5,000 rupees. Okay. But they've said that you are a government purchaser, you have to deduct TDS. So he will deduct TDS of, say, 1% is the TDS. So he will deduct on 1 lakh rupees TDS of 1,000 rupees. So he will not deduct from 5,000 because 5,000 is already charged. So he will deduct 1,000 rupees of what he has to pay to the supplier. So balance how much he will pay? He will pay 1 lakh 4,000 rupees. So 1 lakh 5,000 is the invoice. He will pay the GST because supplier has to discharge the GST. He will discharge it. So he has to pay 5,000. From the 1 lakh rupees what he's paying, he will have to deduct TDS. If 1% is the TDS, he will deduct on 1% on 1 lakh, which is 1,000. So he will deduct this 1,000 rupees and pay balance of 1 lakh 4,000 to the supplier.
And the same invoice, TDS and GST also mentioned. Other,
Yes. TDS will not be mentioned. In this invoice, only 5,000 GST will be mentioned. The buyer has to know that yes, he is coming under the TDS category. So he will deduct this 1,000 rupees and pay the balance for 1,04,000 rupees.
Okay, sir.
Clear?
Yes.
So there's no double taxation as such, saying that 5,000 also is a tax, 1,000 is tax. No, it is not double taxation. Tax is one time only. Supplier is charging tax of 5,000. That is the tax. 1,000 rupees is like a credit that he will deduct it. If TDS was not applicable, full 1,05,000 he will pay to him. But since he is a person who is liable for TDS, he will pay 1,04,000 to him. 1,000 he'll pay to the government, and he will tell the supplier that you can take that credit from the government while you file the returns.
And then, sir, GST not include TDS.
This is GST TDS. Income tax TDS is separate.
No, sir. Registered person collected TDS amount not included in GST. GST amount is a separate tax. Or original amount. And the original amount means original purchase on amount collected TDS, separate deposit to government. But in the invoice mentioned only CGST, SGST.
Correct. In invoice, you'll mention only CGST and SGST.
Okay, and then, sir, collected TDS receipt copy. Who uh, who collected, sir?
See, once you deduct TDS, you have to file one return. Okay, once you file that return, that credit will come to the supplier automatically. Certificate is required, GSTR 7 certificate. The purchaser has to give the TDS certificate to the seller. Okay, and that will appear in his GST portal saying that this is the TDS which is deducted by the purchaser.
Sorry, sir. Okay.
Okay. Now we understood, having clarity, that TDS is not a double taxation. On the same transaction, GST will be charged and TDS also will be deducted. Timing will be different. When will somebody pay the GST? When the time of supply is triggered. That is, once I raise an invoice, that will be the time of supply generally. In terms of goods, for services, we have different time of supply. Once the time of supply triggers, I will pay the GST, and the recipient will pay GST once he makes payment for that invoice to the supplier. That time he will deduct the TDS and pay it to the government. Now, how do I make payment of taxes? I've collected it from my customer, or I've not collected. Still, I have to pay the GST because liability is on the supplier, whether the customer has paid you or no, doesn't matter. Once you raise your invoice, liability is casted on the supplier itself. So supplier has to pay the taxes to the government. How? Through internet banking, you can make the payment, through using credit card or through using debit card or any unified interference payment, that is UPI payments. IMPS from any bank also is possible for making payment of taxes. And offline mode. Online mode means on the computer only you can sit and do it. Offline mode means not on your computer. You have to go to the banker or something like that. You can do it through NEFT forms or RTGS. And NEFT RTGS can be done online also. And this is all payment in check itself. But if you want to make payment in cash, then you are allowed to make payment in cash only up to 10,000 rupees. If your liability is 1 lakh rupees, can you make payment in cash? No, because the limit is making the payment in cash is only up to 10,000 rupees. Beyond 10,000 rupees, you have to make payment online itself. But for this 10,000 also, there is an exception saying that OTC means over the counter. That is when you go to a bank saying that, okay, this I want to make the payment to the GST. That amount you can make payment up to 10,000 rupees. But if you already have an account in that, you are giving a check, that can be any limit, no problem. Because you will give the check to the banker. Banker will make the GST challan on your GST number and he will accept it. That is no problem. But when you are making hard cash to the banker, that is limited up to 10,000 rupees. However, this 10,000 rupees over the counter is not applicable, which means for these four cases, you can make payment about 10,000 also in cash. Who are these category of people? When the deposit is made by government departments. Government departments has given leeway saying that, okay, they can make payment about 10,000 rupees in cash also. Then proper officer or any other officer is authorized to recover outstanding dues. So there is some dues from one person. They go and try to recover. So when this proper officer who is authorized to recover the outstanding dues from the person and they find cash with him, there the taxpayer cannot say no, online it's only allowing me 10,000 rupees. Yes, online it will allow you only 10,000 rupees. But this proper officer, since he's coming for recovery, he can allow you the option to make payment in cash more than 10,000 rupees. Because government needs taxes at the point when they have come for recovery. Recovery means you have filed your returns correctly, but you have not made the payment of taxes. Or you have filed your taxes wrongly itself. Your returns itself are wrong. So when they come and find out that you have to pay more taxes, they have come for recovery. That time you can pay the amount in cash also because government needs the revenue at the recovery stage. Because recovery stage is like a critical stage that you have not filed your returns properly, you have not paid the taxes while filing returns. Now they have come for recovery and now you cannot give that excuse, no, I have only cash, I cannot make the payment. Government will give a relaxation at that point of time. The recovery officer will authorize the portal saying that yes, this person wants to make the payment in cash, allow him. Okay. So when the recovery happens through attachment proceedings or sale of property, that time any property what they get, it's good, right? That's why it is relaxing in that situation. Then third situation is proper officer or any other officer who is authorized for the amounts collected by way of cash, check or demand draft during any inspection. So first is earlier we saw recovery. Now it is any kind of investigation. When the officer has come for any kind of investigation or enforcement, and during that time they see that, oh my God, so much taxes due is there and you're not paid it. So when they see that some during investigation, if we give him some more time, whatever taxes we have to collect, that also will take away and escape. Because once they come for investigation, the taxpayer will be aware that yes, something wrong will happen if they have done wrong, right? Like not every investigation they will collect tax, no. The investigation has happened and it is a success saying that yes, the taxpayer has done something wrong. Only in that case, they will collect that amount also. Whatever they find in cash also, they will collect it, right? So when a recovery officer comes or when they come for any investigation or enforcement, that time any ad hoc payment can be made. Or deposit to be made by persons notified by the commissioner. When the commissioner notifies saying that, okay, he will say that when an organized sector is there, some transporters are there, they want to pay the taxes. That time commissioner has a power to notify saying that such category of persons, they can make the payment in cash. But nothing is notified by now, but he has that power. So effectively three people, when it is government department, when they come for recovery, and when they come for any inspection or enforcement, in these three situations, the limit of 10,000 will not be there. They can make payment above that also. And what is just Challan? Challan is nothing but a 14-digit number, which is whenever payment you make, your CPIN number gets generated, which is Common Portal Identification Number, which is a 14-digit number. Who can generate this Challan? Once you make the payment, For the payment, you have to generate the challan and then make the payment. Who can generate the challan for this? By disclosing which category it is, what is the amount, who can generate it, the taxpayer themselves can generate it, his authorized representative can generate it, departmental officers also can generate it. When they come for recovery, they can generate the challan and tell the pay against this challan, or any other persons. That is, in case of any auction or recovery is happening, the time that auctioneer can generate the challan on behalf of the taxpayer. Single challan for all types of taxes, CGST, SGST, that is called major heads, and minor heads will be like what we will see: tax, interest, penalty. These are called minor heads. Once the challan is generated, it will be valid for 15 days. Within 15 days, make the payment. Otherwise, the challan will get erased. Challan does not have any jurisdictional location code, right? It is only having your GST number. Based on the GST number, you will make the payment of the taxes. Unregistered person, casual taxable person, or NRTP, they pay the taxes on the basis of TIN. What is TIN? Temporary identification number. Now, just apply what we have discussed in the earlier chapters and tell me why. See, unregistered person, I understand they have to make the payment based on a temporary identification number. But this casual taxable person and non-resident taxable person, why should they make payment on the basis of TIN number, temporary identification number? Any guess? Because their registration itself for temporary purpose. So you're saying that full registration only will be temporary. They will not get a permanent registration. No. Once they are registered, they will get a separate registration number. It is a permanent registration number valid for 3 months. But temporary registration number is like for 7 days validity. So they will not use the temporary registration number for making monthly payments. Unregistered persons and NRTP are non-residents. No, that's not the reason. CTP, NRTP for temporary purpose. No, 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 no. So you have not paid attention to the previous classes. A CTP, once he registered, so why should he register? To get a permanent registration number. Otherwise, with temporary registration number only, he can run the business. Correct? That's not the case. Even though can get a registration for 2 months or 3 months, his registration is still a permanent registration number only. Parthasarthi has told correctly that it is for advance deposit, because we know a CTP and NRTP, once they start the business, 5 days in advance only they have to get the registration number. And while getting their registration number, they have to make the deposit. Like first they will make the deposit and then they will get for registration. So for making the deposit, that point of time they do not have the registration number, because once they make the deposit only they will get the registration number. So for making that advance payment of deposit before getting that registration, this temporary identification number is generated by the officer saying that, okay, make the advance payment against this temporary identification number. Okay, very good, Parthasarthi. Yes, that because they have to make payment of the advance amount. That's the reason they get a temporary identification number. Once that is getting approved, then they will get a permanent registration number. And unregistered person, so he is unregistered till he becomes registered. Whatever taxes you have to collect from him, you will collect it from a temporary identification number only. Now, how do you utilize the amount which is reflected in the electronic cash ledger? ECL means electronic cash ledger. ECRL means electronic credit ledger. That's the general shortcut we use because credit cash both start with letter C, but ECL means electronic cash ledger. ECRL means electronic credit ledger. How do you utilize it? One is major head, one is minor head. Plus tax major heads, that is CGST, SGST, IGST, cess is called major heads. Tax, interest, penalty, fees are called the minor heads. Amounts available under major minor head cannot be offset with one another. That was a position before. If you want to make payment of CGST tax, you have to deposit in the challan under CGST tax column itself. But we saw that, okay, a lot of people making mistake. That's why from 1st January 2020, they said, okay, if you made a mistake while making payment, you had to make payment of penalty of 10,000, you have paid it under tax head. This PMT09, you can do a interchange and penalty or penalty to interest, any order is possible. What if their tax at the end of the tax period is more than the deposit advance tax? Then will CPIN be generated for payment of tax? No, Kushi. If at the end of the period, the tax period is the tax what they've deposited is more, then they will get the refund of it. Okay, they can get the refund. They will get the refund at the end of the period when they go for cancellation. If tax payable is more, then they will generate another challan. For creating a challan, no problem. They will generate it under the permanent GST number. So before getting the registration, they will pay it under temporary. Once they are registered, they will pay under that permanent registration number. Whatever payment is there under temporary, that will get added to their permanent registration number. Clear, or do you have any doubts? Clear, very good. We have seen this PMT09 when transfer of amount within the electronic cash. But mind you that this is possible only in the electronic cash ledger. In your electronic credit ledger, you can't do this. That is not possible in the electronic credit ledger. This you can do only in the electronic cash ledger. Payment of taxes by the normal taxpayer. When do we make the payment? By the 20th of the subsequent month. Okay. And cash payments will be first deposited in the cash ledger and the taxpayer shall debit it while making the monthly payments. This is fine. This 20th, that's the due date. Now, how the flow of the taxes will work is first, taxpayer will go to the GSTIN and then he will generate a e-challan called as CPIN. Once he generates the challan, as we said, it will be valid for how many days? Taxpayer will go to the GSTN portal, he will generate the challan and it will be valid for correct Nagaraja, Parthasati, Lokesh. Yes, it will be valid for 15 days. So within 15 days, he will choose one of these modes and make the payment. Once he makes this payment, then it will go to the EFPB, which means E-Focal Point Bank. Each banker will assign one branch as a E-Focal Point branch. It will go to them and they will convert this CPIN to a SIN, that is Challan Identification Number, and give it back to the GSTN. Let's say once you make the payment, it is got credited from your bank account, immediately it will come. So even to explain this, it is taking at least 1 minute. But once you make the payment within fraction of a second, the amount will get credited to your GST electronic cash ledger. Okay, then that will come to your electronic taxpayers ledger, that is electronic cash ledger. It will come. All of this will happen fastly, very quickly. It's not like somebody has to process it. Once you mention the details, once you authorize it, it will happen quickly. What are the rules of utilization of cash utilization? It says that cash ledger can be utilized for payment of tax, interest, penalties, fees, or any other amount. But so cash ledger is like an open thing. You can utilize for payment of anything. Credit ledger is utilized only for payment of tax, and credit ledger cannot be utilized for payment under reverse charge also. That is very important, because you may say that reverse charge also is a tax. Can I make the credit ledger, since you have said in first point that you can utilize the credit ledger for making payment of tax, but electronic credit ledger cannot be utilized for payment of reverse charge mechanism, because RCM has to be paid in cash itself. Now, I said that cash ledger is your ledger, credit ledger is your credit ledger, but any amount which is there in my cash ledger, can I give it to my neighbor? Can I give it to my friend? Like how in a bank account, we go to the bank. If we have to make payment to somebody, we write a check. Is that possible for transfer from their electronic cash ledger to anybody? No, that is not possible. Your cash ledger is your cash ledger. You cannot transfer it to anybody, but you can transfer it to limited people. Who are that limited people? A registered person can transfer from one major head to minor head, that we have seen, and you can transfer it to the electronic cash ledger of a distinct person. That is, within same pan, there's a branch, right? Or within same pan, it is to another state. You have a branch outside the state or a branch within the state. To them, you can transfer it, provided if you have any liability, that should be fully discharged. ऐसा नहीं कि आपके पास liability है and you're giving it as a donation to your distinct person, not possible. Whatever liability is there in your returns, in your assessments, that has to be cleared. Only then, what is the balance in your cash ledger can be transferred to your distinct person. Fine. ITC ledger can be utilized? No. ITC is on ITC as self-assessed and mentioned in the monthly return is credited in our electronic credit ledger. So whatever is coming in our GSTR 2B, that is not our credit. That is only a reflection. Once you claim that, how will you claim it? By filing your return in GSTR 3B, then it becomes your credit. जीएसटीआर 2B में तो मंथली मंथली करोड़ों रुपए आ रहे हैं, लेकिन आप 3B में क्लेम नहीं कर रहे हो, तो यू कैन नॉट गेट इट. यू हैव टू क्लेम इट. If you want to own it, you have to claim in your monthly returns. Then it will come to your electronic credit ledger. Sir, even unpaid liability availed while cannot be transferred cash ledger to distinct person. Didn't understand your question, Nagaraja. Do you want to unmute and ask a question? present, I don't have any doubts. Okay, fine. Nagaraja is also fine then. Okay. Okay. So ITC, once we file the GSTR 3B, then it gets
Sir,
credited in our. Yes, yes, Nagaraj.
so voice audible.
Yes.
So in previous topic, transfer of amount reflected in electronic cash ledger. So even transfer any amount available in the electronic cash ledger to the electronic cash ledger for GST, CGST for a distinct person, provided there is no unpaid liability in this electronic liability register. Even provided provided there is unpaid liability in his electronic liability register, cash ledger cannot be transferred to IGST, GST for distinct person. Sir, is my question.
Yeah. So you're repeating what is stated here. That is here. But what is your question actually?
So my question is, even unpaid liability, unpaid liability in this electronic liability register, even electronic cash ledger cannot be transferred to distinct person.
Right. Say, for example, distinct person, we know that one PAN number, you are having multiple branches. So there is distinct person A in Karnataka, and there is another distinct person B who is also in Karnataka. Possible?
Yes.
How is it possible? How in one state you can have two distinct person?
No, no. It's interested.
No,
Okay.
no. Intrastate, I'm saying both are in Karnataka. Anybody else who can help him? Can we have? Correct. Kushi has given you the answer that they have taken two separate registrations. A is having A is one branch, B is another branch. For both, if you have taken two separate registrations, then they will become distinct person. So it is possible. Okay. Now A has a electronic liability register of 50,000 rupees, and he has in his electronic cash ledger balance of 80,000 rupees. Now, B is saying, I want to file my returns. I do not have balance in my credit ledger. A, you have balance in your cash ledger of 80,000 rupees. So give me that 80,000 rupees. So can A give 80,000 rupees to B? No. So
No.
what he will have to do? He will have to discharge the liability. From the 80,000, he will discharge liability of 50,000 rupees and balance of 30,000, which is after settling his liability, this 30,000 he can transfer from A to B is possible. Now is your doubt clear, Nagaraja?
Okay, sir.
Now the ITC utilization, we have discussed this already input tax credit chapter, but again we'll refresh here that whatever is the ITC of IGST, IGST credit should be first set off with your IGST liability itself. So IGST credit should be set off with your IGST liability first. Then the IGST credit, if anything is available after setting off, you can utilize it for CGST and SGST in any proportion. That is the first thing. For utilizing any credit, you have lot of credit in IGST. You have more than that credit in CGST. Can you utilize CGST first? No. First, you have to utilize the IGST bucket completely, then go to CGST and SGST. IGST can be offset with IGST liability fully. Then IGST credit can be utilized with CGST and SGST. Then you will go to CGST offset with CGST. And if some liability still exists in the IGST, then CGST you will utilize for the IGST also possible. Similarly, SGST also. So first that will happen, but no cross utilization between CGST and SGST. This we know. So IGST, ITC we have. You will utilize it first for IGST, then with the CS and UTGST in any proportion. And ITC of IGST should be completely exhausted. IGST credit should make it zero. Then go to utilization of CGST and SGST. C can be utilized against C, and say IGST you're not able to fully utilize it and there is some liability. So, and C you have more. C you will utilize against C, and balance you can utilize for I. Possible. But C versus S, this is not possible. Other than that, all other combinations is possible. So this is a famous thing what I generally show, that IGST credit I will utilize for my IGST liability, and then balance I will utilize with my C and S in any proportion. Once IGST ka bucket is completed, then I will go utilizing the CGST credit. So this IGST bucket has to be completely gone before I go to CGST credit. CGST can be utilized with the CGST like with like, and then to the IGST. SGST, ITC can be utilized with SGST, then with IGST. Wherever S is there, we will replace with UTGST in case it is a union territory. Okay, what are the common points for electronic credit ledger? When a refund is claimed, just when a person has claimed refund, the said amount shall be debited in the electronic cash ledger or credit ledger. When you apply for refund, there will be a debit, then you will apply for refund. Okay, so what refund you're claiming? Are you claiming credit refund of your electronic cash ledger or electronic credit ledger? Depend on that, you will apply for a refund. Once you apply for the refund, that amount, what is there in the balance, that will come down. Then you will claim for the refund. If the refund is rejected, then they will recredit. You will get that amount back, because once you apply for refund, you have debited it, right? If it is accepted, then good, you're getting the refund amount. If it is not accepted, it gets rejected, then that has to be restored. So they will credit it back. Who? The proper officer will credit that amount back. Now, there is a restriction in utilizing the ITC. This we have discussed in the input tax credit chapter, but since this is related to ITC and returns, we will just discuss this here, that there is a rule 86A. Now, let's understand this in a better manner. What does rule 86A says? That you will have a restriction to claim the credit when the proper officer or commissioner has a reason to believe that the credit of input tax available in your electronic credit ledger has been fraudulently availed. You have availed the credit fraudulently, or when it is ineligible, then he can restrict your utilization. So electronic credit ledger is available with you, he will lock it. When restrictions can be imposed by the commissioner on utilization, when the credit has been availed on the strength of tax invoices or valid documents, but issued by a non-existent supplier. You're having all the documents, you're satisfied all the conditions of section 16, but the supplier itself is not existent, or he's not conducting business from there. How they will do an inspection? They will find that When we gave the registration certificate, that person was existing. After that, when we applied, when we checked for that person, he's not there. At his location also, he's not there. So they will block the credit of the recipient because supplier is absconding. He cannot do anything with it. But he, whomever he has supplied. So if he is not existing, how can he make sales? That's why they will tell that whoever are the buyers, your credits, we will lock it because supplier is not being found. Or the recipient has claimed the credit without receiving the goods. You have claimed the credit, it's appearing in 2A, everything is fine, but you have actually not received the goods. Then also your credit will be locked. And when the tax in relation to which has not been paid, it is appearing in 2B, but the supplier has not paid the taxes. And the fourth reason is when the registered person availing the credit is found to be non-existing. Till now, we are talking about the supplier. Now, the recipient who's claiming the credit, he himself is not existing. Or the recipient is not in possession of the tax invoice. In these 5 situations, your credit ledger will be locked, but the locking can happen or the restriction can be imposed for a period of 1 year. After 1 year, they have to open it up. So restriction, saying that I have lot of liability to pay, lot of amount is there in my credit ledger, but you cannot utilize it because you are dealing with one person who's done fraud. So you are also involved in that fraudulent situation. So we're not saying that you're completely fraud. We're saying that for 1 year, you cannot deal with such person. So your credit will be locked. That is the restriction on utilization of ITC, which is Rule 86A. Apart from these cases, others can claim credit to whatever extent, no problem. So that is Rule 86A. Now the next rule is Rule 86B. What does 86B says that we will not lock your credit, but if you are a person who are making taxable value of supply more than 50 lakh rupees, other than exempt supply and zero rated supply, your normal taxable supplies, if you're making more than 50 lakh rupees, then Baba, you're a big person. Your turnover in monthly is more than 50 lakh rupees. So don't utilize the credit fully. Utilize the credit to the extent of 99%, but 1% you make the payment through your cash ledger. So that is a restriction because otherwise, if I'm below 50 lakhs, I will utilize full credit. I have 1 crore of credit, my liability is 1 lakh rupees. I will utilize the credit, no? But if you are having a credit of 1 crore and you are a person who is having turnover more than 50 lakh rupees and your liability is 5 lakh rupees, I will utilize the credit fully. But they're saying no, since your liability, your taxable turnover is more than 50 lakh rupees, please utilize only 99% of the credit. 1% you make payment through bank. So that's a restriction, but not complete restriction because they're giving 99% usage. So only 1% you have to make payment through cash ledger is what 86B is saying. Clear? Then you have liability register, very simple. What will happen in your liability register? So first is, liability register only we'll see. Liability register is the debits. That is, whatever is the amount payable in your returns or through assessment will come in your liability register. How will it get reduced? When you utilize it from your credit ledger or from the cash ledger, that will get reduced. And credit ledger, how is the credits to our input tax credit and debits will be once you pay payment to the liability. And cash ledger, any payments through various payment modes and TDS and TCS. And debit will be once you make the payment from here to your monthly returns or any other liability. Okay. Presumption under the payment of taxes is that every person who has paid the tax, unless he is proving it, it shall be deemed that he has passed on the incidence of tax, which means that if I am a developer, example, anybody it can be, if I'm a developer, if I'm collecting taxes from my customer, it means the burden is not me, I am passed it on to the other person. Because in some cases, they will tell that it is all inclusive of taxes. When they say all inclusive of taxes, but in the invoice, if they disclose that tax is collected, then even if it is all inclusive, tax has been collected from you indirectly. The pricing has been adjusted in such a manner. Instead of saying 400 plus taxes, they have said 500 all inclusive of taxes. So unless it is proved that no, I have paid it, it is always assumed that the person from whom you are collecting the taxes, he has the burden, he has taken the burden. Okay. That is one advantage of new payment system is fine. Then the interest on delayed payment, this we know, right? There's no doubt on the interest on delayed payment that when the interest is charged and you collect it, right? You have filed the returns late. You have utilized the input tax credit more than what you should utilize. Now you have to reverse it. So what will be the rate? Because I've utilized it in January. Now I'm reversing in May. So for 5 months, I've taken the benefit. So for that, I will reverse it. But the utilization, what I've done for the 5 months, that also have to pay interest. So that interest is 18% rate of interest. So earlier it was difference between this rate and that rate. Now they've made easier for you also that if you're filing your returns late, you're reversing your credit, whatever, wherever liability comes in and you have to pay interest, you can pay interest at 18% per annum. Now, to calculate the interest, they've said that whether you have to pay interest on the payment of full tax or payment only through your electronic cash ledger. So in the Madras High Court decision, they've said, and also in the GST Council, they've come up and said that the interest will be only on the portion of the payment through your cash ledger. If you're making any payment through your credit ledger, on that interest will not apply. Okay? It's a saver, right? Because earlier, whatever was my liability in my returns, on that full interest was payable. But now they have amended this section. They've said interest will be payable only on that portion on which you are paying the making the payment from your cash ledger. If you're making the payment from your credit ledger, on that portion, we will not charge the interest. Because credit ledger is like my amount already there with the government. So I will not make interest payment on that amount. That is decided in this Madras High Court case. GST Council also, they have agreed and they've said, okay, whatever you are making payment through your credit ledger, even if you file late, there will not be any interest. Okay, to calculate the interest, we have to decide what is gross liability, what is net liability. What we'll do is we'll take a break of 10 minutes and by 7:20 we'll come and discuss on the interest and the other chapters. Okay. So we were discussing on how to calculate interest. So some exercises are there. We'll do this. One is the tax is payable on the gross liability or net liability. So say there is a sale for the month of 15 lakh rupees. Purchase and expenses is 10 lakh rupees. So in this case, you tell me what is the gross liability and what is the net liability. Gross is 15 lakhs and net is 5 lakhs. Is Kushi? Okay. Gross liability 15 lakh, net liability 10 lakh, Mr. Lokesh, in line with what Kushi has said. Okay. But is this a liability? This is not a liability because this is the sale value. The liability comes on 15 lakhs, the tax portion. So just by going with the sale value, how can you tell the liability? On 15 lakhs, the rate of tax may be different. It could be 8%, it could be 18%, it could be 28%, it could be 5%. So you have to calculate the liability on the tax, not on the sale value. So 15 lakhs and 5 lakhs is the wrong answer. Say on the sale of 15 lakhs, the output tax is 2 lakh 70,000 and input tax is 1 lakh 67,000. Then what is your gross liability and net liability? Yes. Now you're coming with the correct answer. Gross liability is 2 lakh 70,000 and 270 minus 167, 1 lakh 3,000 is the net liability. Correct. So we know that this is it. So gross liability is 270, 1 lakh 3,000 is the net liability. So if this data has been filed late, then interest will be payable on what value? Correct. So interest will be payable on net liability because gross liability will include amount which we pay through credit and cash ledger. Once you reduce the amount what is paid through the credit ledger, the net amount is the payable. interest will be payable on 1,03,000 rupees. That is what this rule, what we discussed now, that interest calculation says. Okay. Now, further, it says that the theory, what is mentioned here, that is, say, first proviso, which is added to section 50, it says that when you are filing your return late, then interest has to be paid on the net liability, on the taxes or on the invoices which is raised in this month. But if the invoices of this month are included in next month, then you will not get that benefit. Okay. Let's take one example to understand that also. Payment, you are filing return for the month of April. The due date is 20th May. Now, case 1, payment and filing is done on 18th May. Gross output tax is 10 lakhs and ITC is 7 lakhs. So what is the interest which you have to pay here? Interest is payable on 3 lakhs. Parthasarathi. Okay. Gulika and Kushi, ladies wing, are saying that no interest payable. Right. Lokesh also saying no interest payable. Right. Parthasarathi. No interest liability, because if I file the return late, then there is interest liability. My due date is 20th. I file the return on 18th. So why interest? No interest. Okay. Second case, I have paid and filing was done on 28th August. Same gross 10 and ITC of 7. What is the interest payable on? Interest on 3 lakhs, and Parthasarathi has computed that it is 1,183. 3 lakhs on net liability. Fine, Gulika. What is the interest value? Now you tell me. Yes, it will be on 3 lakhs. On 3 lakhs, how will you compute? Yes. Oh, 14,000. 14,000, 1,000, there's a lot of difference. Let us see. Interest will be on 3 lakhs at 18% into 100 is the delay, because from 20th till 28th August, it is 100 days. 100 days divided by 365 will give you the answer. So I believe 14,795 is the correct answer. Here, so be careful. We have to calculate interest not on for full month, on the number of days itself, because interest is 18% per annum. So now next thing is Rule 88B says that if tax has been belatedly paid through credit balance on account of delayed filing of return, then interest is to be paid for the period of delay in filing the return. That is how we have computed. But in all other cases, interest is payable on payment of tax covered by Section 51. It will start from the period, from the date on which such tax was due till the date such tax is paid, and it will be on amount of tax which remains unpaid. Okay. Late fees separate, yes, Nagaraja. Once you file the returns late, interest will be payable and late fees also will apply. That will be separate. Okay. So what does this say? It says that same April month, you have due date in 20th. Now, as I was saying, the return is delayed, but the sales invoice is for the month of April itself. I have made supplies in the month of April, and that supplies I am filing in the April month's return, but however, I have filed the returns late. What is the amount? 10,000 rupees. Payment made to credit ledger and cash ledger is this much. So interest will be calculated on what value? Correct. Interest will be calculated on 4,000 rupees. Very true. Now take the second example. There is April return, but I've included supplies for the month of March. And the value of this March invoice, which I've included in April, is 15,000 rupees. Now I'm discharging this through the April returns. And say for April, there is no sales, so that we will understand this very clearly. March sales I'm included in April, and I've filed this on 1st June. So interest will be calculated on 10,000 or 15,000 rupees or on 5,000 rupees. Which value you will calculate? 15,000 you have discharged through 10,000 to credit ledger. So gross is 15, net is 5,000 rupees. Interest will be calculated on 5,000 rupees. Lokesh is saying yes, 5,000 rupees. Parthasarathi is saying no, it will be on 15,000 rupees. Lokesh Gulika is saying on 5,000 only. So it will not be on 5,000 rupees. It will be on 15,000 rupees. That is the distinction here, because it says that either if you're including that transaction in the same month, then it is fine. But if you're including it in the next month's transaction, then it will be on the gross value itself and not on the net value. Okay, that's the distinction, because that month's transaction you have to include in that month and file it late, still fine, it will be on net. But if that month's transaction you're including it next month, then you're reporting it in an incorrect month, so you have to pay on the gross liability. That is what is a culmination of Route 88B and 88B1 and 88B2. Clear? Transfer of credit, this is fine that whatever credit is payable from the IGST to CGST, this is a kind of settlement which the government has to do, that it will happen that it will not be utilized. Whatever transfer happens from CGST to IGST, it will not be utilized and for adjustment between the state government and central government. Why? Because IGST is a central tax. Unlike CGST, which goes completely to the central government, IGST has to be distributed by the central government to the states also. So that's why they're saying that whenever there is an interstate transaction, the government takes the credit from one state and gives to the another. That's why that settlement will happen. That is the reason that that will not get utilized for payment of settlement. That is ITC of CGST, which is used for payment of IGST. Amount equivalent to ITC so utilized is transferred by the central government from the CGST account to the SGST account. So what is that utilized? That amount equivalent to ITC so used is transferred by the central government from IGST account to the respective SGST account. So do not utilize this portion for settlement is what section 53 is saying. Okay. Now, are we good to go with the next topic, TDS and TCS? Very simple. I will make you understand this in like 15 minutes, not very complicated or below that also. Say you have been given a cake. Okay. Do you like cakes? We all like cakes, correct? So if somebody is giving you a cake, you will like to eat it completely. But while I'm giving it to you, I will say that this is what you will get. Why? Because you ordered for a cake, but I have to take some portion and then give you the balance. So that deduction, what I'm doing is called as TDS. Okay. Why government has said that when somebody is asking you for a cake, you have to deduct something and give it to him because that portion we will take. So that portion which has been withheld by me, it's called as or being taken by me, that is called as TDS. So I'm taking some portion from what I have to pay you. That is TDS. So if you're supplying some goods to me and I have to pay you 1 lakh rupees, I will deduct say 1%, 1000 rupees and give you 99,000. That 1000 what I deduct is called as TDS. Okay. And say in another case, you have asked for a cake and along with the cake, I give you pastry. So that is TCS wherein I am giving you something extra. Now that for this, it is not free. So don't be very happy because for this, I'm giving you forcefully and you have to pay me for this also. You said you want to buy only cake. I said no, along with cake, you have to take pastry because government has said that once you make any transaction through me, I'm an e-commerce operator, I have to pay amount to you, but you have to pay me additional amount and then I will settle you. That is called as TCS. So understood the difference between TDS? TDS is taking a pie out of the cake and TCS is giving you an extra pie even if you didn't ask for it. Why? Because you will pay me the money and I will give you the credit back. So this is all like how we are discussed. It's a mechanism for the government to control the taxes. So TDS is deducted and TCS is collected from you. Okay. Similar thing, TDS payment of invoice of 1 lakh, payment to the government as TDS 10,000 rupees and payment to the vendor 90,000 rupees. That is how TDS works. Advantages, fine. Who will deduct the TDS? The department or establishment of the central government or state government, any local authorities, any government agencies, and any other persons or category of persons which the government notifies, they will deduct TDS. Deductors will be notified by the government, that is any authority of the central government set up by the Act of Parliament, which is having more than 51%, a society which is established. All of these persons will deduct the TDS. And the new addition is any registered person receiving supply of metal scrap, they will also have to deduct TDS. This is a new addition. So you may expect a question from this aspect that will this person be liable to deduct TDS or any permutation and combination is permissible when they say that apart from normal government, any registered person receiving supplies of metal scrap falling specifically under chapter 72 or 281 72 to 81, any chapter. If a person receiving metal scrap, he will also have to deduct TDS under the GST law. TDS rate is 1% under one law, which means effective rate is 1 plus 1. And on what value? On a value which is more than 2,50,000 rupees. If the value exceeds 2,50,000, I'm supplying to the government laptops worth 1 lakh rupees. Will the government deduct TDS? No. I'm supplying 10 laptops worth 10 lakh rupees. Will they deduct? Yes. So when the contract value is more than 2,50,000 rupees, might be multiple invoice because they've said per contract, not per invoice. My contract value is, if it is more than 2,50,000 rupees, then the government will deduct TDS. Now, when there will be no TDS, when the location of supplier and place of supply are in the same state, but place of recipient is in another state, then no TDS, because supplier's thing and location of supplier and place of supply should be in the same state. If the location of supplier and place of supply is in different state, then TDS will not be deducted. So we take few cases here. Location of supplier and place of supply and recipient, all of the three are in the same state. Then TDS is deductible as CGST and SGST. If the location of supplier and place of supply are in different state, then TDS is deductible as IGST. And in third scenario, where the location of supplier and place of supply are in the same state, but the recipient is in a different state, then TDS is not deductible. So basically, the recipient state and place of supply should be in the same state. If the supplier is in one state, recipient is in another state, it is still fine. But the place of supply should be also in the same state of the recipient, only then TDS is deductible. Otherwise, TDS in this case is not deductible because the place of supply and the recipient are in different state. So one thumb rule will be, to deduct TDS, you have to see whether the location of the recipient and place of supply are in the same state. If the location of recipient and the place of supply are in different state, TDS will not be deductible. Supplier's location can be anywhere, doesn't matter. We have to see place of supply and the location of the recipient. These are the various combinations. Basically, here we are seeing in only one case, it's not deductible, two cases, because place of supply and location of the recipient are in two different states. Then TDS is not deductible. So you have to see only these two things. Here it is same. Here also it is same. Here also it is same. But here it is not same. So TDS is not deductible. Fine. Now TDS we have discussed. Now we'll go to TCS. That is when you are doing any transaction with electronic commerce operator. Then there are two types of transactions which happens through electronic commerce operator. When you supply goods through e-commerce operator, you're subject to TCS. But if you're supplying services through e-commerce operator and it is a notified services, then e-commerce operator has to pay GST under reverse charge. So TCS will not applicable. Like in this case, notified services, what we have, notified services are when you're transporting any goods through any motor vehicle or transportation of passengers like a Ola, Uber. In that case, TCS will be not applicable because taxes itself is paid completely by Uber and Ola. Service of transportation of passenger by an omnibus, except when the person supplying through e-commerce is a company, same like passenger cars, radio taxi and all. If there is omnibus, then also TCS will apply. TCS will not apply. Full tax will be paid by the e-commerce operator itself. Any accommodation, then also e-commerce will fully pay. Housekeeping services, plumbing, carpentering, urban clap, and any restaurant services when you're supplying it through a e-commerce portal, that is like Zomato, Swiggy, they will pay taxes on these behalf. So in such cases, these are the notified people So when these supplies are happening to these notified people, then this notified person will pay the full taxes, so no TCS will apply. Other than this, notified services and goods will be coming under this TCS provision. So only this bucket will be under the TCS provision. If it is notified, the e-commerce only is paying fully tax. So why again double tax? So no taxes in that, no TCS in that case. Only in case of other than notified services and goods, right? In that case, TCS will apply. That too when you're supplying it through a e-commerce operator. How much will be the rate of TCS? 0.25% plus 0.25%, 0.5%. Here, place of supply criteria are not required because, and anyhow, this 0.5% also is further reduced to 0.5% from 10th July 2024. Clear? Okay, this is fine. Some illustrations. Now we'll get into returns under GST. Any queries till now before we get into? Because it was very simple topic, so we could just complete it. Any questions on TDS or TCS? No, very nice. TCS collected by seller, TCS collected by the e-commerce operator, not by the seller or buyer. It is collected by the e-commerce operator. Applicable rate of TCS will be 0.5%. We will have to check dates of transactions. Correct. For your exam purposes, it will all be new rate itself. So you have to use 0.5, 0.25% itself for Kushi. Yeah, but the date will be relevant. Very nice. Any turnover limit for TCS? No, there is no turnover limit for TCS. As we have seen in the provision, no limit here. Sir, even unpaid liability availed while cannot be. Sir, in previous TDS also no limits. TDS there is a limit, Nagraj, 2,50,000. TCS there is no limits. Okay. So returns under GST, very simple. We go to the main returns. This is theoretical aspects. You have to file various returns. Normal taxpayer, if you're making sales, you will have sales for whatever sales. It is called as outward supplies. So all outward supplies you will report in GSTR1. Here you will report only outward supplies. You're not paying any taxes. This will be filed by 13th. Okay. So by 13th, you will file your GSTR1 and by the 20th, you will file your GSTR3B. So a regular taxpayer will file this GSTR1 and 3B. If you're a quarterly filer, then instead of filing GSTR1, you will file a statement called as IFF, because you want to give the credit to your customers. So you will file a IFF, and quarterly you will file GSTR1 and 3B. Okay. So monthly you will file IFF. This is for a QRNP taxpayer, that you will file monthly IFF if required, not a compulsion. And quarterly you will compulsorily file GSTR1 and 3B because it is quarterly return. So you will file your actual GSTR1 and 3B on a quarterly basis. And composition taxpayer, he will file GSTR4. A non-resident taxable person, he will file GSTR5. A casual taxable person, he will file this itself. No special return for him. Other returns are the first return, that is first you register. The first return, what you file, that is called your first return. The TCS collection, what you do, you will file GSTR 8, and annual returns will be through GSTR 9, 9A or 9B. A final return will be filed in GSTR 10. A UIN holder will file his return in GSTR 11. And the best part is all the returns are to be filed electronically only, no manual filing. Okay. So why important to file the returns timely? Because you are doing your self-assessment. That is fine. You are doing your self-assessment. It also has a bearing on the recipient. If you file your returns on time, he will claim the credit. That's why it has a bearing on the recipient as well. File directly on the GST portal, gst.gov.in. Upload through offline utilities if your data is very minimal. Even if it is furthermore which you cannot upload it, then you have GST Suvidha providers who will give a patch or a connection between your systems and the GST portal, so you can file your returns directly through your accounting software itself. Okay, so that is the relevance of GST Suvidha providers, GSPs and ASPs. Common information, no separate returns for CGST, SGST, IGST, one common return for all the three. GSTR1 will be outward supplies by the 10th of the subsequent month, but it can be extended by the commissioner. So ex-commissioner has extended it, saying that, okay, you can file your returns by 11th from the end of the month if your turnover is more than 5 crores. And if your turnover is less than 5 crores, then you can file by the 13th. So QRNP filers will file by 13th. Monthly filers will file by the 11th. Furnishing details of outward supplies. This GSTR1 has to be filed by whom? Normal taxpayers. ISD. A CTP will file, but following papers will not file. These are all exceptions. ISD, NRTP, common composition scam taxpayers, TDS payers, TCS, OIDA. These people will not file GSTR1. They will not file. That's why it says excluding. But a CTP will file it. Okay. What is the due date? 13th for quarterly filers. For monthly filers, 11th. Okay, this is IFF, which I've explained. Now, HSN also you have to mention in your returns. What is the HSN code? Harmonized system of nomenclature, which you get from customs. Same HSN you have to apply here. Up to 5 crores turnover, then you will mention up to 4 digits for B2B supply. For B2C supply, it is optional. You don't have to mention it. When your turnover exceeds 5 crores, then just 1 minute. Fine. So the HSN code will be 4 digits for B2B supply, for B2C supply, it's optional. Not that you cannot use, you can use it, but it is an optional thing. Where the turnover exceeds 5 crores, then you will mention it as 6 digit for both B2B and B2C supplies. Okay, sometimes you cannot file if you are not filed your return for continuous period of 3 months. And if you have not filed your previous GSTR 1 and 3B, then current months you cannot file it. And if you have not exceeded file for certain months, that is 6 months, if you have not filed, you cannot file. That is, this is a pictorial representation, return not furnished, then you cannot file your GSTR 1. A person who's opting for QRMP has not furnished GSTR 3B for the previous tax period, then you cannot file it this month. And if you are adjudicated under 88C, that you have to pay the taxes, and if you do not deposit or you do not furnish the reason, then also your return will be blocked. So in these three situations, you cannot file your GSTR 1. You have to be careful. Okay, this is fine. Contents, you have to give invoice-wise breakup. Now, what is this invoice-wise breakup? If I'm supplying it to 100 people, I've raised 100 invoice. Should I give 100 invoice? Yes. If all your 100 people are registered under GST, then you have to give details of all those 100 invoice. But if it is unregistered person, that is there, that transaction is called as B2C. If it's a B2C transaction, if it is interstate, then you have to give the detail if the value of the invoice is more than 1 lakh rupees. But if it is intrastate, then you can give consolidated. You have to give invoice wise, normally 2 categories. If it is B2B and if it is B2C interstate, then you have to give if it is more than 1 lakh rupees. But if it is B2C intrastate, then you can give consolidated, and B2C less than 1 lakh, then also you can give consolidated. Okay. This is same representation here. Any amendments can you do? Yes. Any changes in your invoice, you made a mistake while filing the return, you can correct it while filing next month's return. You have a column in your returns called amendments. You can amend the previous data in your subsequent month data. Till when you can rectify it? Rectification is possible by the 30th November or the date of filing annual return, whichever is earlier. Say now we are in the month of November. This month I've made any mistake, I can correct it next month or subsequent month. I've found it out later on next year. Can I correct it? Yes. Till the 30th November of the next year, I can correct it. So for 24, now we are in 25, 26. So 25, 26, any returns what I find, I can correct it up till November 2026. GSTR 1A. Now, if I don't have time till correction till the next month, I want to correct it this month itself. Can I do it? Yes, you can do it. There's a new form. This is a very important thing for you, that there is a new form called GSTR 1A. After filing GSTR 1, but before filing GSTR 3B, if you have found any correction to be done, you can do it in this GSTR 1A. Then GSTR 1 is there. Then from the GSTR 2A or 2B, I will file my GSTR 3B. So this is the monthly return which I will file, which will have details of all my outward supply and my inward supply. Now, let's go to the rules. The rule says that if your GSTR 1 is more than 3B, can it be? Yes, possible, because both you are entering manually itself. So I am entering all my outward in my GSTR 1. That should be in 3B, but I've made a mistake. Because GSTR 1, I'm not paying any taxes. In my GSTR 3B, I'm paying the taxes. So if my GSTR 1 is more than 3B, then what will happen? You will get a notice. You will be intimated on the portal through notice saying that pay the differential tax liability. 1 lakh you have declared in your GSTR 1, 80,000 you have declared in 3B. So 20,000 there is a gap, pay the tax liability. Either pay the differential tax liability or explain the difference within 7 days. If you do it, fine. Otherwise, we have seen now your returns will be blocked. So this is the provision which says that if you do not respond or you do not pay the taxes, your returns will be blocked. GSTR 2B is the total credit when you will get it. After everybody, suppliers have filed your returns, that is by the 13th, you can download the GSTR 2B. GSTR 3B, we know very simple by the 22nd or 24th. For a quarterly filers, for a monthly filers, 20th, you can file your returns. Why 22nd and 24th? Each state they have bifurcated. Few states by the 22nd, few states by the 24th. You do not have to remember this because this is not a thing to be remembered. They will mention in the exam that the due date is 22nd or due date is 24th for a quarterly filer. But for monthly filer, they will not tell you because for monthly filers, everyone the due date is 20th itself. And QRMP scheme is there where your turnover is less than 10 crores or less than 5 crores. Sorry, if your turnover is less than 5 crores, instead of filing monthly returns, you can file your returns on a quarterly basis. Quarterly basis, but QRMP stands for quarterly returns and monthly payment. So you have to file your returns quarterly, but payment has to be made monthly itself. Quarterly returns and monthly payment. This is the scheme. It is an optional thing. If below 5 crores, you're saying, no, I don't want to opt it. I want to file my returns monthly. Yes, you can still opt for it. Nil returns, that is, if you do not have transactions, still you have to file a nil returns. No, I don't have any transactions. I will not file any returns. No, you still have to file a nil return. Revised return possible that any corrections in terms of 1 and 3B. You cannot file actual revised return. Once you file your 3B, can you revise it? No. Any one you file, can you revise it? You have option of 1A now. But for 3B, you cannot revise it. But the values, any correction, you can claim it or report it through next month's returns up till which month? Say for 22-23, up till 30th November, you can claim it, or the due date of filing annual return, or the actual date of filing annual return, whichever is earlier. Before these two dates, you can file it whichever is earlier. So if you file your annual return in October itself, so you should revise your returns by the October. But if you're filing your returns, annual returns at the end, then by 30th November, you can claim the credits. You can disclose additional taxes, whatever is payable, everything through subsequent months returns. I think apart from this, there is not much thing in the returns. Composition, taxpayers, fine, transition, fine, final return, and things like that. So what we'll do is we'll take a few MCQs to understand how much is our understanding. Okay, come on. Now this is the time for you to be active and participate. Right. Most of you have given the correct answer. The answer is B. Which of the following is not permissible? Check deposit of rupees 25,000 over the counter, because over the counter you have a limit of only 10,000 rupees. Other all of the things are permissible. Clear? Good. Lot of people's adding in because of this MCQ. That's a good sign. Which of the sequence of payment of taxes? What is the sequence of payment of taxes? Confusion. The correct sequence is first is all dues related to previous period first, then all dues related to current periods, then demands raised under sections 73 and 74. So correct order is C, B, and A, which is C. Mostly people are given answers like B and all. No, correct answer is C. Third question. Oh, here people are saying C. No. How can payment of interest payment and payment under reverse charge be made? It can be made from cash ledger. The answer is B, not C. Shagufta and Sid, why are you saying C? How can you make payment from liability ledger? You can, liability will be there. You, the question is, how do you make payment? You will make payment from cash ledger only. Yes, this one mostly Shagufta again wrong. The answer Nagaraja wrong. It is C. CGST, then UTGST in any order. Any order. Question number 5. Right. C is the correct answer. ITC of CGST first utilized for payment of CGST and the balance is utilized for payment of IGST. Right. Correct, Dhruti. Yes, D. Correct. Interest is payable on all of these things. Yes. It is A, not B. From the date following the day on which the tax becomes payable, not from the last day. From the day when it was due, from that day you calculate interest. Yeah, this is very important. Where can you claim the credit? Electronic credit ledger. No. Remittance made by the deductor will come in your electronic cash ledger. We had discussed, no, electronic cash ledger will be your deposits and TDS and TCS. Deductor means TDS? Yes, TDS. Go to this question number 11 and 12 directly. Yeah, answer for MCQ number 11. 11C, correct. GSTR 2A and 12. Yes, 12, it is D, electronic credit ledger. Question number 13. Question number 13, A or D. Okay, confusion. Actually, it is D. All the above statements are correct. The commissioner may extend the time limit. The details of outward supply will include details of debit note and credit note and revised invoices. And details of apply supply shall be submitted in GSTR1 by all registered person other than ISD, NRTB, person paying tax under 10, 51, and 52. 51 and 52 is TCS and TDS. Section 10 is composite taxpayers. Answer is all the statements are true itself. HSN code, yeah, HSN code is harmonized system of nomenclature, which is used as a common code for all the products. Suppose I'm selling pen, you are also selling pen. I am selling blue pen, you are selling red pen. Is there a difference? Product wise, it is same. So the pen will be under one HSN code. Now, for every product what we sell, we have to mention HSN code in the invoice and report it. Okay. So that reporting will generally be 8 digits, but 8 digits will become too long. So they've said large taxpayer more than 5 crores, you report 6 digits. Less than 5 crores, you report 4 digits. That is what is HSN code. Clear, Shafuka? Yes, answer is C. Okay, we'll go with the last MCQ for the day. Yes, the answer for this is B. GSTR 3B by the 20th of the succeeding month. Okay, so that is it. Hope you understood three chapters very well. Yeah, when do we raise debit note and credit note? When there is increase in the value. You have raised an invoice for 1 lakh rupees. Now you realize that there's a mistake. You should have raised for 1 lakh 10,000 rupees. So for that additional 10,000 rupees, you will raise a debit note. That is increase in value. But say if you raised an invoice for 2 lakhs, you are supposed to raise it for 1 lakh 80,000. 20,000 extra raise kiya. For that 20,000, you will raise a credit note. And if you have sold it and customer complains that I didn't like the product, then also you will raise a credit note. जो भी value घटता है, you will raise a credit note. जो भी value बढ़ाना है, you will raise a debit note. Separate chapter study easy, but whole chapter plus direct tax stuff. So you have to be prepared. Parthasarthi, 1 day, 2 day before exam, this is not the topic. You have to be prepared. Keep your notes so that once you remember all of this before exam day, you will definitely remember it. Okay. Thank you very much. All the very best for your exams. And if any doubts, we'll be in touch through these classes. Thank you. Thank you, Parthasarthi. Thank you, Shafukka. Thank you, Gulika. Thank you, Ms. Kushi. Thank you, Mr. Lokesh. Yes, sir. नहीं खत्म हो गया सर 8:30. Thank you, sir.